T-10 to showtime. On my mark, roll intro and mark. Camera's ready. Camera 1 check. Camera 2 check. Audio. Roll guest package. Action. The views and opinions expressed in this podcast are those of the individual speakers and do not necessarily reflect the official positions of Visa or the speaker's employers. This podcast is intended to provide general information and should not be considered health, legal, tax, or financial advice. Todd, coming to you in 3, 2, 1, action. This is Policy Sandbox, a collaborative space for ideation at the intersection of payments, commerce, and public policy. On this episode, we're going to talk about independence, oversight, and holding on to our humanity in the midst of the AI revolution.
What I fear for me is if I ever try to let it replace my own cognition. And if I've done that, then I'm not sure what my point is. What's the point of Peter Conti Brown if I'm just regurgitating the garbled approximations of human understanding from AI? I want to be different. I want to be at a frontier. I want to be spiky. I want to be real.
That was Professor Peter Conti Brown, one of the world's foremost thinkers on financial policy. Peter is the author of The Power and Independence of the Federal Reserve and co-author with Sean Venata of Private Finance, Public Power. His Substack, PCB Central, is required reading for financial regulators and all policy nerds. In this interview, Peter shares insights on central banking, the policymaking process, and of course, payments. But since artificial intelligence is changing the way we all process information, I wanted to ask Peter what aspects of knowledge creation AI cannot replace. Navigating technological change is important for professors and policy wonks. It's existential for entrepreneurs. So before I sat down with Peter, I wanted to hear from a small business owner that knows a thing or two about adaptation. Jonathan Levin runs Cable Car Clothiers, a San Francisco institution. Cable Car Clothiers thrives by focusing on its decades of heritage and deep local roots. In the digital age, small businesses don't just survive because they're small. They thrive because they're focused on curated, authentic experiences that no algorithm, no AI can replicate. Entrepreneurs like John shouldn't be spending their time handling cash, calculating exchange rates, fighting hackers, or making credit underwriting decisions. Cable Car Clothiers has weathered every technological wave over its long history, and John is confident he'll weather the next one too.
Hi, I'm Jonathan Levin. I'm head haberdasher here at Cable Car Clothiers here in San Francisco. I am the third generation owner. We started in 1939 in San Francisco on the corner of Powell and O'Farrell. We got personal service, high quality, a made-to-measure experience, so we're really excited to have anyone come check out our shop and all the fun stuff we have here in San Francisco.
We're here in the Policy Sandbox with my very good friend, Jonathan Levin. John and I have been friends for, I think, about 10 or 12 years, and I've known about his business since before I even moved to San Francisco. In some ways, you're the last of a vanishing breed, but I think your longevity speaks to both your entrepreneurial spirit and your vision, but also this unbelievable ability to stay authentic to your founding concept. So maybe talk a little bit about how you have stayed focused, how you've thrived, even despite this massive change in the way people think, the way people shop, the way people dress.
Yeah, I mean, to boil it down quite simply, it's just keeping it traditional and classic and heritage and just having good quality stuff that people can feel comfortable and believe in. And a lot of our heritage comes from English clothing and wearing a tie and a white button-down shirt. And, you know, fashion changes, the times change, but some things are classic and still have relevance.
Your journey is in some ways the perfect way to illustrate a larger point that we've been really digging into in the Policy Sandbox, and that is how can the friction of commerce be abstracted away so that businesses like you can focus on what makes you so special and so unique, taking away the friction of having to worry about payments or exchange rates or extending credit to your customers. But that wasn't always the case.
Sure.
Maybe you've...
Yeah, I mean, technology is always changing. I mean, we're in San Francisco, obviously, which is the genesis of all this great technology and different companies. So, I mean, that's a big part of our identity. So we've initially started as a catalog business similar to Brooks Brothers and some of the other great American companies. And people would read about, cable car and be able to shop when they were taking the train into New York City or whatever their vocation were at the time. And that was kind of pre-Amazon and the whole pre-internet revolution. And then you embrace technology with websites and different POS systems, and it's great when you can have a system just take over all the payments and you can focus on your business. You use it as a tool, as an overall
That's right. Yeah, you put
vehicle to make your business succeed and have longevity.
I've got a few things about this store that I love, and I should mention to the audience, I'm an extremely loyal customer of Cable Car. I think everything I'm wearing came from this store. One of the things that you do here at Cable Car that is so unique and so valuable, especially in 2026, is people can come into the store not knowing much about suits and ties, and you can help put together an outfit. Some might say that a chatbot could tell you the same thing. What do you say about this idea? Like maybe I could just ask AI to help put together.
You can ask AI, where can I get a cool bow tie? But we cannot possibly get every single fabric online. There's so much thought that goes into the collection that we try to make it one of one, like you buy it and then it's unique to the world and to you. A big part of it is just human interaction and talking to people and figuring out what their vibe is, like what they want to get into, what kind of clothes. And it's really striking up a relationship, and that's something that you cannot do on AI. You do not get the human interaction. Just bringing the human element into it and having a different kind of creative experience, which is often lost when you're sitting behind a computer and not getting out and actually touching the fabric.
That is a profound point, and we're going to dig into it shortly. But first, I've been joined here in the Policy Sandbox by Peter Conti Brown. Peter Conti Brown, welcome to Policy Sandbox.
Delighted to be here, Todd. Thanks for having me.
Peter Conti Brown is probably the most preeminent scholar on central bank independence, bank supervision, the chartering of financial institutions in the United States. He's a lawyer that has thought deeply about the separation of powers, federalism, and is also very focused on ethics in business and government. So the last few months, Peter, have been very interesting for you. Given that you have your finger in so many different pies, how does it feel to have all the different areas of expertise that you uniquely possess seeming to be on fire simultaneously?
Disorienting. Those are sticky fingers when you have your fingers in lots of different pies. And it reminds me that one of the reasons why I feel so exorbitantly lucky as a tenured professor is that I can develop these different parallel, sometimes perpendicular areas of expertise. But when they all come together, it requires me to break down the silos between them, because those silos are artificial. I'm only one person, right? The same reason that makes me curious about Aristotelian virtue ethics and curious about the balance between technocracy and accountability in central banking, they come out of the same brain. It's the same me. And so the work that I've been doing over the last year is really one of integration. It's really trying to understand, well, what is the through line? What is the common thread? How can I link my interests in all of these different areas? And that's been a really fruitful endeavor.
Peter, you are, and I mean this with a lot of love, and you're my favorite version of this, but you are like the epitome of the ivory tower. Harvard, Stanford, you're now at University of Pennsylvania. Within the University of Pennsylvania, you are a tenured professor with a chair in some of the most highbrow philosophical aspects of law, economics, and business. So I mean this with love, but you are the epitome of the ivory tower. And yet, when I talk to you, I have such a strong connection back to one of the things that makes me so motivated to do what I do as the head of policy and head of the Visa Economic Empowerment Institute here at Visa. And that is make sure that all these ideas are actually translating to things that improve people's lives. And the one area where I see that happening with you, that reminds me very much of what I see at the grassroots, Main Street, small businesses, is the more innovation can allow you to do that thing that makes your scholarship great, the more your personal taste becomes the value add. Of course, all your analysis is tremendous, but I love knowing that you're a power lifter when I read your book about the Fed. I love knowing that you are a triathlete when I read your book about financial supervision. I don't know exactly why, but it feels like so much more credible and authentic because I know you. And I have this parasocial relationship with you through your writing, and then we've become good friends over the years through your partnership with the Institute. I had a conversation with another dear friend of mine who is right here in downtown San Francisco, running a business that has been in continuous operation since 1939. And I was talking to him, and because I read your books, I have this idea of how much the world has changed since 1939. The financial system has changed, the payment system has changed, commerce has radically changed. But you walk into this store, and what is left is the soul of this place. And even if I could program a chatbot to go and buy me a suit, I would still prefer to go try it on and have this guy, John, tell me whether it looks good. I would trust him more for that type of advice than all the AI in the world. And I feel the same, like I trust your writing about financial policy so much more because I know how much you can bench press. I don't know why that is, but I'm so glad you're sharing those stories with us through these platforms.
I think you've captured it. And I've heard you talk about your friend in San Francisco, and I've been in stores where someone appreciates the artistry of their craft, and I benefit as a consumer from them, even if I might consult with AI on the same question, like what's the right cut for a suit or something like that, or what's the right fabric or color combination or something like that. I'd rather hear from someone who has told me about their kids or grandkids, or I have a perspective about what makes them human. And I think, my son told me something that he had heard, or maybe he had said, we've had pianos that can play Mozart by themselves without people for over 100 years, the player piano. And yet we still have concert pianists. And that resonates with me because there will be, AI could write this book that I'm writing on the history of the Fed. And even the most advanced version, trained on all the same documents that I'm reading, would not write the same book that I am writing. And part of that's because of how much I bench press, or that I'm going to do an Ironman, or that I'm a father of 4, or I'm devoted to my wife, or grew up the way I did. The point is, it's because I'm a person, because I'm a human. And that connection, I think, it may be the most important thing that we can do after the AI revolution. Discover our own humanity, individually and collectively, and plug it into all the things that we're doing rather than try to hive it off. And if we can do that, we will find so many opportunities for exchange and interchange with other people who have plugged into their own humanity as well. And I think that's the next project for after the revolution, is discover our humanity, not be cogs in a wheel.
I've learned so much from you. I didn't actually attend Wharton, but I feel like our conversations are like a Wharton MBA by other means. One of the things that has been such a profound lesson that you have taught me is that when it comes to financial policy making, there's this very healthy tension, almost designed into the system, between financial innovation and things that can unlock potentially more growth, but with a higher level of risk on the one hand, and on the other hand, this desire for financial stability, things that will reduce risk, even potentially at the expense of growth and efficiency. And what I've learned from you is that tension is a good and healthy thing, but it seems as though lately there's a geographic or maybe a partisan split where there's a very strong bias in some parts of government around the world in certain countries for the stability side of the mandate. And increasingly, we're seeing those countries pulling away from some of the more innovation-oriented economies. And that creates some fragmentation. I'd just love to get your thoughts on how one could think about this trend, especially given the fact that we're increasingly in this globalized financial system.
I think the question between stability on the one hand and growth on the other is such an important one, because this trade-off sits at the center not only of financial policy, but kind of people's intuitions about change in general. And I like the way that you have framed it, because no pro-growth person is anti-stability, and no pro-stability person is anti-growth, although the latter, you do have an anti-growth movement. We'll put them to the side. And so the question is not, why can't we have both of these good things? Of course, most people want to find a policy space where you're getting both. The question is, once you are at a frontier where the trade-off has to occur, which priority will you give? And where you are relative to the status quo is going to have a lot to do with what your preference is. And so in some parts of the world, stability is exactly what they want, because the stable equilibrium favors either the government in power or the people in that place. Where for others, innovation is do or die. If you don't have growth, then it's all over, because you're trying to get a seat at the table. And the only way to get into it is to grow into it. And then if you look inside countries, and so the politics of non-democratic countries like China, you still have that tension between stability and growth, because there are people, there are groups of people, there are interests that are clamoring for seats at a table, and others who are saying, wait, let's not change anything, because the game we've got going is the good game for us. And so those tensions, I mean, they go back hundreds of years, but in finance, they're particularly important, because on the one hand, if you look at all of the problems that we face in the world, where finance might pose a solution. If the problems are the status quo, then the solution requires growth, right? It requires some kind of change. You've got to grow into these solutions, because the status quo is problematic. But then on the other hand, if you turn and look and say, wait, look what we have accomplished. Look at the way that finance has fueled trade. Look at the hockey stick of growth since the Industrial Revolution relative to the millennia of human experience, where growth was not a factor at all. And let us celebrate this fact. Then you think, well, let's not do anything to mess this up, because we've got a great thing going here. And so that stability innovation trade-off at a frontier is really it's a profound ideological impulse. It's a sense of, what do you favor? Are you favoring the status quo because it's been good to you? Or are you looking forward to busting up that status quo so that it can be better for you? Recognizing that caveat at a frontier is doing a lot of work, because I still think that there is plenty of, if not low-hanging fruit, medium-hanging fruit, where a ladder of finance, we can get there and say, you know what? Here's an opportunity for innovation that can be handled with stability. But we sometimes miss those opportunities because we're so focused on this big ideological debate. Well, stable is good if you're already at the table, and growth is good if you need to get there. And so that's kind of how that debate unfolds. It unfolds basically everywhere throughout the world.
And Peter, that brings us to another great area where I've learned a lot from you. And this is one where I think many people have learned from you, and that's the notion of central banks as independent actors. And here the dichotomy that you've taught me about is independence on the one hand versus political accountability on the other. This seems to be another one of these areas where we've really kind of reached the limit of how much we can really say that central banks are completely independent of the political system, given that they're making such important decisions about growth and things that are important not just to price stability, but to the overall health of the economy. How can one apply your framework to this notion of central bank independence?
I think it's by letting ourselves be comfortable with the fact that these schematics that we impose on a messy world to make sense of it necessarily are artificial, and they create order out of disorder, but not because they've resolved the disorder, but because they're just making it more usable for us. And so when we say we need an independent central bank, what we're trying to say is interest rate policy and the availability of credit macroeconomically. It's not underwriting, but just the general level of credit available to the entire system. Those decisions, on average and over time, are better made not by politicians. Full stop. And that statement is empirically one of the least contested truths about the way that money and politics work. And it's kind of a long sentence, but it's really important. On average and over time, some politicians are very good at managing, especially after a hyperinflation. Some politicians are elected to bring in incredible change, something like Brazil in 1994 or something like that. But on average and over time, politicians are very bad at short-term management of interest rate policy. And so independent central banks are meant to solve that problem by being better than politicians, not by being perfect. Now, I've spent most of my career in the pre-2025 era saying, yeah, we all agree on that. So let's look at all the other things that central banks do where they're kind of hiding under the table of that truism that central bankers are going to be better than politicians at setting interest rate policy. Is that going to be true of bank supervision, of bank regulation? Is that going to be true of payments policy, of running payment systems, competing with private sector while they're simultaneously regulating the private sector? Well, of course they're not. Those are different ideas. Those are different concepts. And so maybe it's better if we kick them out from under the table and say, hey, stand up, got to defend yourselves, because sometimes we have central bankers making value judgments that they're ill-equipped to make. Now, I put that big asterisk on there because 2025 just dumped here comes a wrecking ball. And so for the last year, I've had to say, wait, we all agree on this central empirical fact, right? And the answer is mostly yes, but with very powerful dissenters. And so I think that's the way to think about independence. It's overspecified, that there's the idea that we've got a central bank is good because independent. It's good at a narrow thing. And we've asked it to do many things. And so thinking about what is very good about the narrow thing is important in 2026. And reflecting on the fact that we've asked it to do many things is also important, even if it's receded from the headlines a little.
One of the many things that central banks now do, not just in the United States, but virtually everywhere around the world, is they play some role in not just operating the monetary system, but operating the payment system for moving that money around the economy. And this, too, is an area where the notion of pure political accountability does run up against the reality of what is notionally an independent technocratic institution that shouldn't be picking winners and losers. It's become harder because, like central banks, payment systems now do more than just move money from one account to another. There's this whole spectrum of trade-offs and choices and value that can be delivered. Certainly Visa is very opinionated on this point. But when it comes to payments, you have the rise of central bank digital currency, you have the operation of account-to-account payment systems, you have the cash system, check clearing. You've studied this for decades. How should one apply this aspect of the Peter Conti Brown mental model to payments infrastructure?
I think it's important to recognize that what we refer to as the public sector and the private sector, just like when we think about Peter Conti Brown or Todd Fox or anyone, these silos are a little bit artificial. Because what is the public sector, after all, but the people hired by the people hired by the private sector? And by the private sector, I mean all of us. I don't just mean businesses. I don't just mean for-profits, right? I mean the citizens. And sometimes citizens incorporate and do business on a for-profit basis. Sometimes they incorporate and do community activity on a nonprofit basis and go to church or found clubs. And sometimes the private citizens just, say I do over an altar and get married. And that's a form of community as well. And when citizens get together and then vote, and then the people that they have voted in hire others to do work. That's the public sector. But see, the fluidity between those is really important. And so when government intersects with markets and payments, what we're seeing is a kind of policy that reflects a democratic process in which the private sector is deeply involved. So the idea that the public sector would be involved in payments policy is obvious and important and deeply historical. And that's true not only in the fact that they're going to regulate, the public sector will regulate payments policy, but also in generating, some of the most important ideas about how to make payments better. Bank supervision is about, on the banking side, the management of financial risk across that public-private divide. And so it has never offended me that the government would be deeply involved in the generation of ideas around improving payment policy, just like they are in financial policy generally. The place where I've gotten a little bit bothered is where the public sector will enter a market as the provider of a good product or service, while simultaneously regulating competitors, and without devoting the resources to research, development, security, competitiveness in that space. And I think that kind of public option, public regulation model creates real confusion and real potential for harm. Even as I would absolutely advocate for governmental experimentation in payments as in other areas, so long as we do so with an eye toward recognizing where resource constraints are going to bind, where safety is going to be a concern that the private sector might be better suited to provide, and where innovation can carry forth in a way that's going to be better for all, so that we can get those channels of communication between the citizenry, however organized, and the state, however organized, in their most efficacious bases.
Is the United States falling behind in payments?
Well, that wasn't true in most of the 20th century. And a lot of people will love to beat up on U.S. payments innovation. And I think in some cases, you still see that. I think the paper check usage in the United States is substantially higher than in other developed countries and even in developing countries, although paper check usage is falling away very, very rapidly. I think that there are some ACH issues that are also a little bit cumbersome. And certainly large dollar clearance mechanisms are still on banker hours, which is something that doesn't make a lot of sense to me, Monday through Friday, 9 to 4. That said, look at the most important innovations in payments in the last 10 years. Two that I could think of would be tokenization and contactless. Where did that come from? Where did that innovation come from? It came from companies like Visa and others in the United States, headquartered in the United States, operating globally and innovating like crazy, just everywhere in all kinds of spaces. And that's a US-based phenomenon. So to a lot of my friends, especially in the academy, they would love nothing more than to just beat on US payments as being archaic and slow and cutting edge technology circa 1975 or whatever, people like to say. I say, well, what innovation do you want to see that you haven't seen? And mostly what they say is real-time gross settlement on consumer-facing payment rails. That's the one thing that I've heard talk about. And there I'll say, touche. I think that there are innovations that you've seen elsewhere, but contactless and tokenization have replicated an RTGS type system for consumers in most places for those who have access to it. And I think that that's no small thing.
We have had a few conversations on this show, and it will not surprise you at all about tokenization and contactless being very important innovations from the perspective of the Visa Institute. But the other kind of token, the cryptocurrency token, stablecoins, of course, being such a huge issue right now in the debate around payments and bringing some regulatory order to tokenized money as opposed to tokenized payment credentials. is perhaps the most pressing issue for financial policymakers, certainly in the United States at the moment, with the Genius Act passing last year and the Clarity Act on the agenda now. When we look to Basel, there's certainly a tremendous amount of time being spent looking at the financial stability and growth trade-offs of stablecoins. I'm reminded of your great book, Public Power, Private Finance, where you and your co-author, Sean Venata, talk about how it came about that we have these things called supervisors and this notion of discretion. In reading that book, felt so many echoes of today, and specifically this notion of chartering narrow banks and what we now can do in terms of a regulated construct around stablecoins kind of rhymes with things we saw from 100 years ago or 150 years ago. Maybe bring us some historical perspective on regulation versus supervision and these different frameworks for managing risk in the private sector using this amazing model that you develop in the book.
A lot of people have compared the advent of stablecoin and crypto more generally to the 19th century free banking era. This is a time where states led the way on chartering banks. There was no federal charter after the Congress did not recharter the second bank in the United States until 1863 and the advent of national banks. It's about a 30-year period. People were really worried, okay, we're going to get mostly low quality issuance of this kind of money, and consumers are going to be befuddled and the victims of fraud because there's not going to be able to tell the quality of money. I've never been sold by that comparison for a few different reasons, but the Genius Act, I think, makes it even harder. What we have now is, through the Genius Act, is an attempt to fold within the banking perimeter this chartering authority to issue a new kind of money. And we can really argue how new this kind of money is. I think the claims of how new and how importantly different stablecoin is from other forms of digital money are a bit overblown. But the big fundamental change is they are now subject to supervision, where they were not before. And that's a big difference. So historically, supervision evolved from the 1860s. That's when federal bank supervision originated, until about the time of the Great Depression, when the authority of supervisors to be this kind of second order managerial core really took shape. And then, just like we were talking about earlier about this difference between stability and innovation, we've seen different kinds of administrations come in and want supervisors to either do more to promote stability or do more to promote innovation. But supervisors have always been there to look over the shoulder of bankers, to evaluate business models and liquidity positions and financial impact of various decisions. Exactly what supervisors do day to day is going to change, of course, according to the changes in the political zeitgeist. But with stablecoin today, what I prefer to say is, because I'm less evangelistic and enthusiastic about any specific technology and more about the process of technology more generally, is the Genius Act does a good thing by folding this kind of digital innovation within the banking perimeter so that supervisors can put that into conversation with other kinds of innovations that are occurring throughout the system. And because supervisors get to be the point of the spear from the government's perspective to evaluate the risks that banks are taking, bringing stablecoin into that perimeter allows that process to unfold at its best.
Peter, we're almost out of time, but I just have to say, I think I'm a reasonably productive person, but your ability to produce books, Substack articles, to teach a class. I think you're one of the most beloved professors at the University of Pennsylvania. You organize conferences, you're flying around the world. How do you do this? And to what extent is technology helping and hindering your career as a purveyor of new ideas?
I appreciate that. There's so many days when I look back on the day and I think, well, what did I accomplish? So I love hearing that feedback. The internet, I'm young enough that I didn't do scholarly research without it. So I've spent plenty of times in archives and in libraries for sure. And I remember well the experience of and the smell of pulling dusty tomes off of, Widener library shelves when I was an undergraduate at Harvard many years ago. But today, having when I write a book chapter. So this morning I wrote a chapter on this book that I'm writing, my magnum opus on the history of the Fed. I was revising this chapter, and I had by the time I finished it, sent it to my RA, I had maybe 80 tabs open on Chrome, and that included Dropbox links to my archival pages where I was evaluating. So I looked at that just today. I thought, how would I do this without things like Dropbox, where my RA knows I can highlight a link and say, go look at this file that a different RA pulled when they were in this research library in California 4 years ago or something. And I thought that it's just really incredible what I'm able to do. But do you know what has not been a major factor for me in my research to date is AI. And I use AI approximately 40 times in a day, but not for my research. I use that mostly for my athleticism. I'm a triathlete and a powerlifter, and I'm constant dialogue with AI about, periodizing training and how to, what order, if I've got a 2-a-day workout, how should I structure that? And like what I should think of about efforts, that kind of thing. And the big reason there is technology for me has got to be the thing that empowers me to do the thing that I'm best at doing, that gives me my most authentic voice. And this is an Aristotelian notion where I'm trying to get at what he called eudaimonia or human flourishing or happiness. And he talks about it as something that visits you. So you got to cultivate these virtues that are most correlated with the visitation of eudaimonia. I think about it more as cultivating that happiness yourself. And for me, AI, if it replaces my ability to read and to write, then it will have done something pretty harmful to me, because my cognition is enhanced. My experience of flourishing is enhanced by wrestling with a problem and working through it cognitively. But where AI has been incredibly helpful for me is just kind of organizing those thoughts, being a second voice to bounce ideas and help clarify what I'm trying to do. So I'm very bullish on what AI can do for me professionally. What I fear for me is if I ever try to let it replace my own cognition. And if I've done that, then I'm not sure what my point is. What's the point of Peter Conti Brown if I'm just regurgitating the garbled approximations of human understanding from AI? I want to be different. I want to be at a frontier. I want to be spiky. I want to be real. And I want to think about these problems and this is a place where we can end where we began, by not pretending that the different things that I'm interested in are all so purely siloed. I think I'm just one thing. I think I'm just one person. I think all of our listeners they're just one person. And so pulling all the things that motivate them into one and removing the barriers that might distract them from that integration, I think that should be our project. And where AI can help you with that project, then God bless it. Let's rock and roll and move forward. But where it becomes a crutch, where it becomes the barrier itself, where it blocks that integration, I think we need to exercise some discipline and make sure that we've mastered it rather than letting it become the master.
Peter, I have to tell you, I think I've read every single Substack post. I've read your books. I'm not saying it's the AI, because clearly it's your voice. But one of the things that I notice when I consume the totality of your writing is you've become so much more soulful since ChatGPT hit the screen. And I feel like perhaps that's exactly why. I have to tell you, when I read your Substack, it's not just about financial regulation and public policy. It's like you have essays about sports and you have essays about life. You wrote a beautiful story about your marriage recently for Valentine's Day. And I just want to say thank you on behalf of the readers of PCB Central for letting the AI automate some of those tasks so you can show us a little bit more of what makes you, you.
Well, that means so much to me, Todd. Thank you so much. Let me just repeat here. I never let AI write a single sentence that I write. Never. Not once. And I've not even been tempted to do it because I feel like my wrestle with that language, my attempt to make metaphors do what I want them to do, that's me trying to find my voice, trying to understand myself. And I think you have nailed the causal effect. I think that, November 2022 in ChatGPT, when its eyes first came open and came online, I did start asking myself questions. Well, all right, well, what's left for me? And the answer is reflection, introspection, and then building a community around that. And I think that that's something that I hope can resonate with a lot of people, not just from me, but from everybody engaging in the same activity.
Peter, this conversation has been a study in contrast. We talked about the difference between pro-stability policies and pro-growth policies, between regulation, supervision, between political independence of central banks versus political accountability of central banks. And now you've kind of left us with the biggest study in contrast of all, which is the more technology changes our lives, the more it brings out our unique human value. So thank you for sharing your unique perspectives with us in your writing and in this conversation today. We can't wait to have you back on Policy Sandbox soon.
I can't wait for it, Todd. I'm such a fan of yours, and I've learned so much from you, and these conversations are just fantastic. So I'm delighted that you've joined the ranks of premier podcasters, and I'll come back as often as you let me.
Every conversation that I have with Peter Conti Brown is an education, and I think that's the best one yet. Well, that's it for Policy Sandbox, but there's more to come. I'll be sitting down with even more of the best and brightest thinkers in finance to understand not just what the next era of global payments will change, but what it can preserve as well. So please do come back, dig in with me and my guests on Policy Sandbox. For more insights and practical advice from the Visa Economic Empowerment Institute, check us out at visa.com/VEEI.